PepsiCo had another good quarter, but the outlook left something to be desired. Lower profits and a bit of an earnings reset. Pepsi's CFO, Vice Chairman, member of the CNBC CFO Council, joins us now from company headquarters in Purchase, New York, Hugh Johnston. Welcome back, Hugh.
Thank you. Good morning, Sarah.
So talk us through the fact that business seems to be doing better. North American beverages came back, but the outlook was a little disappointing.
Well, in a lot of ways, the two things are connected. We did see stronger performance in Q4, and that's following what was a very good Q3 for PepsiCo's portfolio overall. If you look across the world, our international businesses are performing quite well. Frito-Lay North America is growing at a very good clip, and North America Beverages sequential improvement again as we see that business strengthening. Now, part of the reason that's been happening is we did start to invest back in our businesses late in 2017 and into 2018, and we've seen such good responsiveness to those investments. We as a management team made a decision that we're going to accelerate our investments in 2019 back into all of our businesses because we think we can accelerate the top line growth of the company sustainably, which we think is long-term the best outcome for investors.
It's a really important distinction because what Coke gave us yesterday was a lowered outlook, way lower than expectations on macroeconomic concerns. I mean, James Quincy said 2019 is going to be slower growth than 2018, and that's why the numbers are going to look different. That is not what you're saying, is it? Is that what you're seeing?
No, actually, we think the macros are largely fine around the world. Of course, there's always going to be one or two areas of dislocation, but by and large, we think the macros are benign, perhaps a little bit slower than what it's been in the last couple of years, but certainly for a consumer staples company, not notably so. No, for us, this is really much more about the fact that we participate in two great categories, convenient foods and beverages. And frankly, we see opportunities for outsized growth, and that's why our strategy is to invest to capture that growth.
Okay, Hugh, it's Jim. I guess I have a little different spin from my colleague Sara. I'm seeing a possibility that you guys can go from 3-4% long-term to 4-6%, and that the outlook actually is for an acceleration because of the quality of your portfolio, the innovation of your portfolio, and the fact that you're going to be expanding more international. Do you think that 4-6 is too big a hurdle? Am I too optimistic?
No, I don't think that at all. Jim, your expectation is right in line with our long-term guidance. So, we saw a sequential improvement in revenue from 2017 to 18, and we see the prospects for continued improvement. Our guidance in 2019 for revenue is 4%, and that's higher than it's been in a number of years. And frankly, as we look forward, we want to be in that 4-6 range on a consistent, sustained basis, and we should be able to do that in a macro environment that's slightly favorable or slightly unfavorable. We think the opportunity is there to do it, again, primarily because the product portfolio is just so darn good compared to what you see in most of our food and beverage peers. We think we're in the sweet spot of food and beverage.
Yeah, I actually think you guys have done some things, too, that is really, really exciting. So I had the privilege, as you know, we had a dinner the other day. I would sit next to Neil Patrick Harris, who's like the greatest guy. I think that this bubbly wipes out LaCroix. And I think the personalization of beverages, that it's going to really come to the fore. I know Ramon, your new CEO, really liked that acquisition. And I've got to tell you, I mean, to me, when you put together what you're doing with personalization and bubbly, I think that's part of the acceleration that I see with SodaStream really paying off.
Yeah, that's exactly right, Jim. I mean, we are a consumer-centric company already, and under Ramon's leadership, we're becoming even more consumer-centric. We're going to go where the consumer wants to go because we know there's natural tailwinds in consumption of the types of products that we create and we brand and we distribute. We have all these great capabilities. We know we're on trend with consumers. So if consumers are moving to sparkling, we're going to do that, whether it's in a can like bubbly or whether it's make it home like our SodaStream business. So we do see a ton of opportunity out there in beverages.
Hey, Hugh, it's Carl. How do you characterize the FX impact, and should that be a warning to people who are invested in global names?
Well, I mean, our FX expectation for 2019 is about a 2-point drag. If you're asking me about where the dollar is going, I mean, generally speaking, it's been strong in past years. I wouldn't try to predict where the dollar is going forward.
Hugh, I wanted to ask about taxes. It looks like your tax rate is going to go up. So what is the net effect of the tax cut that we saw, both on corporations like yours and on spenders and your customers, net? Has it been a big positive, and do you see it continuing?
Yeah, I think in terms of the overall economy, I think it's pretty hard to debate that the tax cut's been a positive in the United States. I think the GDP growth is faster, and obviously that the unemployment rate is quite low, and I do think those are connected facts. For us, the tax cut, we got a very big benefit in 2018. Our tax rate went all the way down to 18.8%. Some of the costs of the tax cut actually hit more in 2019, so our rate is going to go up to 21%. But net, that's still lower than where we were before. We've seen our tax rate go from 7 or 8 years ago, it was about 26, 27%. Now it's down to about 21. So the tax cuts generally have been quite favorable for us.
Hugh Johnston, always good to catch up with you on earnings day. Thank you for joining us.
Thank you.